Welcome back everyone. In today's video I want to talk about a company I believe will outperform in the medium to long-term future, which is Amazon. So Amazon, a few days ago, their founder Jeff Bezos went out to a tech conference and had a conversation. And during this conversation, he mentioned that he agrees that right now we have an AI bubble. People are getting very excited. Every experiment gets funded. Every company gets funded, and it's difficult to distinguish good ideas from bad ideas. And at the same time, he believes that AI is a very real thing and that it will fundamentally change the world, essentially. And this is why the company is investing tons of money into AI and building out their AI infrastructure. And yeah, I agree with this entirely, because if you take a look at their business, right, and you take a look at what massive investors, Warren Buffett, Terry Smith, people that have outperformed the market over a long period of time have said, this company meets really all of the factors that I personally look at and that these investors look at. We're looking at growing gross margins, right? Their margins are relatively low due to their distribution services. However, since their business is growing into other sectors, the data centers and now robots, which I'm going to talk about in a minute here, their gross margins are growing. And so are their operating margins, right? And their net profit margin. And more importantly, if we look at their return on capital employed, which is really the number one number to be looking at for long-term growth, this is also growing. We're looking at 16% right now. And of course, people will look at this and think, okay, this is very average return on capital employed, probably even below average. However, if we look at their expenses, 83 billion in capex, 88 billion, almost 89 billion in R&D. These expenses are mainly the company reinvesting ahead of time. They're taking their revenue that they're making in this year, in this current year, and they're already reinvesting it. This is the reason that their net income doesn't look particularly high at 59 billion, because their expenses, their reinvestment in the company ahead of time is just so massive. And so if we were to reduce or perhaps even entirely erase these expenses, the return on capital employed would increase to 50, almost 60%. And when you look at this business, you think, okay, 16% return on capital employed, it's not the greatest thing. Even if they reinvest that, right, it only theoretically at most compounds by 16% per annum. But this would be a fallacy. This would be the wrong approach, the wrong way to think about this. Not the only thing that's important with return on capital employed is that it's a high number. The company also needs to be really good at reinvesting that capital, that return on their capital. And we're looking at a business here that's reinvesting at such a rapid pace that their return on capital employed looks smaller, even though it's very, very big. And this is why the company has looked overvalued over a long period of time, right? Their return on capital employed was at most 28, 29%. And this was only during the period of time where they had to prove their profitability. This is why I believe that this company will really outperform over the medium to long term, because they're really, really good at taking the money they're making, billions and billions, hundreds of billions of dollars, reinvesting them and growing the company, compounding. If we look at the newest news with Amazon and robots, they're investing massively into their robotics infrastructure. And what have we seen in the past? In the past, we've seen Amazon taking whatever they've produced, whatever they've used internally in the business, once it's saturated to some extent, once they've been able to develop it and use it themselves in their business, they start selling it to other companies. They developed their distribution services, started with books, then started selling more items. And then eventually they realized, now we have this monopolistic infrastructure, these distribution services all around the world. And now we are going to offer them to other people. Now other people can use fulfillment by Amazon to sell their products. In the same way, they did the exact same thing with Amazon Web Services. They developed an online infrastructure, a globalized online infrastructure to host their website, to host their infrastructure, and they're offering it to other businesses. And just like another YouTuber, Joseph Carlson, who has a very, very big position in Amazon, said recently, they're also now developing robots, and I believe that eventually they will do the exact same thing with their robots. Everybody is hyped up about Tesla. Everybody is hyped out about this company that's developing robots, humanoid robots, and this will apparently be a huge market, according to Elon Musk. But nobody is talking about how Amazon already has existing infrastructure, is developing existing infrastructure, and will sell that to other businesses eventually. Thank you for watching, everybody. If you enjoyed this video, feel free to like and subscribe so you don't miss another video. In the future, I'm going to be talking about other very interesting companies. I have another infinite money glitch on the way that I'm going to be talking about in my next video.